Welcome to this installment of Clarifying Tax Situations with attorney and CPA David W. Crossing.
So, is there real criminal exposure if you have failed to report your prior year cryptocurrency noncompliance? Up until 2014, it was pretty understandable that you may not have understood how to report cryptocurrency transactions or even may have had a duty to report cryptocurrency transactions. But in reality, if you really look at the Internal Revenue Code, Code 61 defines as income any accession to wealth. It is about as broad as imaginable, and that alone would pull in cryptocurrency gains. Nevertheless, many Bitcoin users were not aware that they were supposed to record their gains and losses as taxable events. They weren't realizing that they had a taxable event each time they made a purchase with the cryptocurrency, each time they sold cryptocurrency for fiat, for US dollars, each time they exchanged cryptocurrency for one type of cryptocurrency for another, Bitcoin to Alt, to Lite, to Ethereum, etc. Or they may not have realized that when they mined cryptocurrency and got paid in cryptocurrency, that was subject to ordinary income tax rates and taxed as self-employment income, which means the first 100,000 of that income is going to generate 15.2% tax for self-employment tax alone. That's roughly $15,000 of tax on the first 100,000. But also keep in mind you can offset that by the expenses of generating that cryptocurrency income on Schedule C. What I need you to realize, because of the recent John Doe summonses that have been going out, you have risk for tax evasion. Okay, you can no longer choose to just hide and think that the government is not going to find you when you're invested in cryptocurrency. There was a lot of belief in the past that the use of cryptocurrency was undetectable. Matter of fact, there were internet websites where you could hire a prostitute, you could hire a hitman, you could buy drugs, you could do all this illegal activity, and the thought was that if you use cryptocurrency, that movement of wealth was untraceable. Okay? This is now false because of the use of John Doe summonses. Also, eventually, when you come out of cryptocurrency and you deposit that money into an account, if you deposit more than $10,000, there's going to be a Form 8300 reporting that's going to go to the government to tell them that they deposited that. If that is a large, unusual transaction, there might be suspicious activity reporting. If the bank believes you're running a ransomware scheme where you're holding computers hostages in exchange for cryptocurrency, and this is illegal proceeds, they're going to send off suspicious activity reporting and possibly money laundering reporting to the federal government. If you're out of compliance, it could be as simple as just being subjected to civil penalties for failure to comply with tax laws. Underpayments attributable to virtual currency transactions can result in an accuracy-related penalty or information reporting penalties. However, penalty relief may be available to taxpayers and persons that are required to file an information return who can establish reasonable cause for not doing so. Examples: if you pay somebody more than $600 in cryptocurrency and they're not a corporation, you have to report that on a 1099. If you don't do so, you can literally be viewed as aiding and abetting the income tax evasion of the person you didn't issue the 1099 to. Worst case scenario, or they can hit you with a penalty for not issuing the 1099. Under audit, they can just disallow the expense because you didn't issue the 1099.